So welcome to the Amati Insights call. As usual, before we start, please do take a look at the disclaimer, which is also available on our website. And particularly note that none of today's comments constitute investment advice. So it's important always to do your own research. And if necessary, do seek professional guidance. So with that said, welcome again to the Insights call. Today we're revisiting a sector that we have discussed previously on these calls, which is the semiconductor memory market. It's a sector that we've had pretty continuous exposure to since we launched the fund, and it's obviously an area of huge innovation and one we think that's growing in relevance over the next few years. Mikhail, as a semiconductor physicist by training, this is obviously an area close to your heart. Perhaps you could just briefly set the scene for us, give some background on the industry and kind of where we are today.
Yeah, thanks very much. So the two types of memory, which you're very familiar with as a smartphone or PC users, DRAM and NAND. And the way I think about it is DRAM is where you crunch the data, and NAND or flash is sometimes referred to as where you store the data. So fundamentally different technologies, but ultimately serving same need of handling your data. And the industry behind this DRAM and NAND has been a pretty troubled one for a couple of decades. It was growth, but then it was consolidation. There was a degree of financial distress. Several companies went bust, several companies merged, and what's sort of 10 years ago, it consolidated down to effectively 3 DRAM players and 4 really, 5 officially, but 4 if you look at GVs and things like that, 4 and a bit players in that. So it became a disciplined oligopoly. They wouldn't be like to be called that way, but they're behaving in a very disciplined manner through the cycle. And it's a very cyclical industry because the demand is cyclical, but the industry learned to respond to that demand with a supply discipline. So just to give you an indication of cyclicality, SK Hynix, which is one of the 3 DRAM players, over the past decade, their operating margin varied from over 50%, which is enormous if you think about it, to minus 24%. So they were loss-making on some occasions. But on average for that period, their average operating margin was 23%, which is very healthy. And of course, it's a very capital-intensive industry, so just looking at margins is not enough. But the return on equity for the Hynix, again, ranged from minus 15% to plus 40 and 16% on average. So it's an industry with nice returns through the cycle, nice margins through the cycle, and the share prices through the cycle reflected that. They compounded in teens. But of course, if you want to be, if you wanted to be kind of more astute and agile and contrarian through this sort of 10-year period of cycles, there were several periods you could have more than doubled your money. So it's a really good industry if you look through the cyclicality. And the perennial fear around the semiconductor industry is that Chinese competition is threatening to upend things. Not really. No, there are Chinese memory makers, but they are at the lower end. And you need EUV, you need this advanced semiconductor machines to make these chips, and Chinese competition can't get it. So you're kind of fairly safe for now.
Yes, for now. Obviously, they're improving quickly, but yeah, I agree. So, I mean, obviously, the demand picture in this segment has changed dramatically in the last, decade or so. We went from very much PC based to then adding smartphones and then data centers, and when cloud really took off, that was a big increase in demand for memory. And now, obviously, AI is coming or is here, and it's coming to areas like industrial and automotive applications increasingly. So I guess that's been the biggest story, has it, for the last couple of years?
Yeah, well, AI has been a bigger story for lots of things, but yeah, there's a certain. It's interesting. We had a conversation, if you remember, with NVidia about 3 years ago, where it became clear to us that one of the key gating factors, if you like, limiting factors in the AI performance is the amount of memory you can attach to a GPU, because this models are so memory hungry, they're so data hungry. So a new kind of memory, high bandwidth memory, HBM, was born, and NVIDIA was if you like, the stimulus behind it, but it was done by this memory companies, and the statistics are striking. I mean, the A100, which is one of the early NVIDIA GPU star products, had somewhere between 40 to 80 gigabytes of memory attached to each GPU. That's about 10 times more than a typical Office PC has. But B200, which is their latest, is up to 192 gigabytes. So absolutely huge increase in memory content. And coming up, Blackwell Ultra, which they're launching soon, will be almost 300 gig per GPU. So huge memory content growth attached to this GPU clusters. And SK Hynix had an early lead and remains the leader in this field. There's been a great opportunity. We had SK Hynix at the time, and it's been a good contributor to our returns. But the GPU roadmap continues to show more and more of this memory content ahead. I mean, we're in the middle of Computex, the technology exhibition in Taiwan, and all the announcements from AI players suggest this memory roadmap just keeps growing and growing.
Yeah, amazing. It's been a remarkable thing, and I guess what we're talking about there is the direct impact of AI. The memory that actually sits in the AI clusters alongside the NVidia GPUs and other things. Um, but it's more than that, isn't it? I guess there are kind of second order effects because AI is creating new products and services which also are very memory heavy, it seems.
Yeah, I mean, that's the intriguing bit. This hasn't happened yet, but our thesis is that we will see the second order increase in memory demand across, everything digital that we use. The easy example to use, obviously, even though AI has been a great incremental demand driver already for this HBM, smartphones and PCs remain kind of main consumers of memory, and they're in a tricky part of the cycle. People bought a lot of PCs and smartphones during COVID. Replacement cycles elongated, so we've been living through a slow period for PC and smartphone makers. But we're now seeing a memory content per smartphone, for example, going up. So Apple launched Apple Intelligence, which is their AI product, originally only on their Pro modification, because that's the only iPhone that had 8 gigabytes of memory. Now, for the next generation, which is the current generation, everything has a minimum of 8 gigabytes of DRAM because they want AI intelligence, Apple Intelligence, and everything. And the rumor, of course, Apple will never confirm or deny these things, but the rumor from the supply chain says that in September, when they launch the next iPhone, it'll be 12 gig everywhere. So this is a pretty big, 50% increase, kind of in a year, like for like. And we're having conversations with the supply chain, which suggests that Apple is redesigning how they architect the whole motherboard, if you like, the whole circuit board within iPhone to accommodate even more memory, kind of similar to what NVIDIA has done with their HBM. So the memory race to accommodate these models and all the data that feeds them and kind of makes them run is on in smartphones and increasingly in AI PCs, which is the new category that kind of Microsoft is trying to popularize. Again, here in Computex, we've seen lots of announcements of AI PCs. And just to give you a sense, NVIDIA version of AI PC, something they call DGX Spark, is 128 gigabyte of memory in your desktop. I mean, my desktop, I think, has 8. So
Obviously,
to,
yeah.
to, to give you a sense, not everybody will need those, but putting this intelligence on the edge, if you like, on our desks, in our palms, in our pockets, is a huge memory demand driver.
Yeah, no question. Yeah, I mean, it's clearly going to have a very big impact in the consumer space. Um, and I guess beyond that, because we're seeing more and more applications in industrial and automotive. In fact, we had a good example this week, I think it was, when Volvo said they're going to be embedding Google Gemini into their vehicles directly to allow, drivers to just have a sort of AI conversation at the edge, as it were. Um, and these just loading and running these models requires a lot of silicon, including a lot of memory. So and it's not just the DRAM, is it? It's not just the dynamic memory. It's also the storage element, the SSDs where the model data and the parameters are kept. That also needs to be very fast access. That's NAND memory, as you mentioned. And we keep hearing more and more examples of the demand growth here. Recent company reports across the sector, talking about that, even though we've been in quite a tough economic environment. And I guess people are seeing this in their own lives. I mean, in our industry, for example, a lot of the meetings that we do now with clients, etc., are being recorded, and so that data, that information, can be transcribed and summarized, which is very memory hungry. Um, and I think there is an incentive generally because of AI to accumulate and kind of crunch and store memory, data more now than than there ever was. And that's because AI can then turn it into something more useful. Anyway, it's fascinating stuff. But what are we thinking in terms of investments? What are the investment implications here for us?
Well, like I said, there's an interesting term which I've seen used on a few occasions, data sphere, which is the sort of the whole corpus of data that we're creating, and it's accelerating. We're finding more reasons to capture, store, and crunch data, and so this data sphere is growing rapidly. And the steel and cement, if you like, for that world is memory semiconductors, in our opinion. So you want to own steel and cement companies if you're going through a construction boom in a physical world, and I think that's exactly what's happening in the digital world. Yes, it's cyclical, but as we've seen before, and we continue to see now and in the future, the underlying structural demand growth is intact and strong, and it's a very disciplined industry. 3, 4 players, clear evidence that they manage their capacity well through the down cycles and enjoy outsized margins in the up cycle. And the valuations kind of mirror that cyclicality, because at the bottom of the cycle, price to book is a preferred metric for this industry, because how much you're paying for the capital that earns that mid-teens return through the cycle. And in our Hynix example earlier, for example, and at the bottom of the cycle, you're paying 1x. You're paying less than 1x for Samsung Electronics, the largest memory maker in the world historically. And that's just a bit like saying, here's a company that will grow through the cycle, will earn nice returns through the cycle, nice margins through the cycle, but you're paying less than the replacement value for that company. That seems like a compelling value to us. So Samsung, Hynix, our preferred memory place, preferred memory names, and it is a significant part of our portfolio. It's 4% of our fund today. It is, if you like, AI exposure. We like this space more than NVidia. NVidia gets all the headlines. It's pretty well researched and discovered. I think this memory makers are overlooked by the consensus.
Great. I think that brings us up to about time. But yeah, thank you for that, running through that quick update on the memory sector. And as you say, a big important sector for us. And with that, we'll leave you all and see you again in 2 weeks' time.
Thanks very much.
Cheers.